Hey, welcome back to Principles of Accounting 2. Happy to have you with us. We are already in the fifth week, if you could believe it or not, of our time together. We are one third of the way through the semester already. It goes by so quickly. And I just, again, wanted to say thank you all so much for your efforts in the classroom. It makes this experience a lot better. And yeah, you're all doing so great and great work. So thank you, thank you, thank you. Uh, as you know, I was out last week. I did get a chance to post the recording to the classroom, so hopefully you had a chance to review it. Um, Last week we talked about job order costing, or at least the recording talked about job order costing. And that is how we apply direct materials, direct labor, and factory overhead to each customer's order or to each job. Today, we're going to talk about process costing, which is the continuous manufacturing process. And we allocate our direct materials, direct labor, and factory overhead to each department within uh, within work in process. And so I'm going to show you the primary differences between job order costing and process costing, and I'll do a deep dive into process costing. So to recap what happened last week is you should have had just the quiz for chapter 19 to or the yeah, chapter 19 quiz to complete from last week. And for this week, we have again just a quiz. So nice, easy peasy. Not a whole heck of a lot. I'll also say if you want to work ahead in this class, you're totally more than welcome to do so. In fact, I encourage you to work ahead if you want to. Totally up to you. But it's available to you if you want to work ahead. No worries. So, without further ado, let's go ahead and jump into today's discussion on process costing. And I'm going to minimize my monitor here. And let's jump into process costing. So the first thing I'm going to do is to recap from last week. To recap from last week, I will review the difference between process costing and job order costing. I will walk through with you the way that we compute our cost of goods sold using process costing. I will also walk through with you the primary differences when it comes to process costing between first in, first out, uh, last in, first out, and the weighted average. So, a couple of things. Excellent question. Henri's, great question. Love it. Could we do the midterm if you wanted to do it in advance? Sure. No, you don't have to wait. You can do it now if you wanted to. Great question. So let's jump in, go ahead and jump into process costing. So I want you to think about the manufacturing perspective in the difference between job order costing and process costing. Last week, you learned about job order costing, which is how we apply direct materials, direct labor, and factory overhead to each customer's order or to each job order. And that was very specific, and we went through a very specific process. Each customer's order is a unique job, right? That's what we learned about last week. To compare that, today we're going to be talking about process costing. And the way I like to think about process costing is how things are so darn similar as they're being made. And I always like to give the example of a water bottle. So here in my hand, I have a bottle of water from Costco, and it says Kirkland Signature Purified Water on the label. and inside it is water. But I want you to look at this water bottle, or if you have a water bottle in front of you, take a look at it. And I want you to think about something. And here's my question to all of you who are on the call. How many bottles of water do you think Coca-Cola or Pepsi makes in one day? How many bottles of water do you think they manufacture in a single day? Any thought? Any guesses? How many do you think they make in a day?
About a billion or something.
About a million? Yeah, you're right. You're right, Caleb. It is about a million. They make about a million water bottles a day. Okay, just think about that. So you go to the grocery store, you go to Costco, you go to Sam's Club, whatever, and you go and you see huge pack of water, right? 40 bottles water, and they charge you only a couple dollars, $4, $3.19, whatever. That's the price that you pay. I want you to think about that for a second. Think about each bottle of water and how standardized it is. They're all the same exact bottle. They have the same label, same size cap, same fluid ounces. It's very highly processed, mass production. It's made in a continuous flow. Okay, standardized process. This bottle of water started as nothing. It started as raw materials. It started as plastic pellets when it arrived at the factory. Just simple plastic pellets. We took those raw materials, those plastic pellets, we took them out of raw materials and we put them into working process. And as we put them into working process, we put them into different departments. So the first department is the molding department. We shape the bottle of water. That's how we a bottle of water is the bottle itself is made. It's shaped in a mold. So we melt down the plastic pellets. We put the molten material into a mold. The mold cools down, and then lo and behold, I have the shape of the bottle of water. That's the first department, it's molding department. Second department is the filling department. I fill the bottle of water with the next raw material, which is water. Okay, fill it with the water. Then it moves to the next department down the conveyor belt to the capping department. Put the cap on. Then it moves to the next department, which is the labeling department. Put the label on. Then it moves further down. It goes into the packaging department, where it gets put on into a package, onto a big pallet, and then it's moved into the warehouse as finished goods. So many different departments and so many costs related to it. So think about that process that the water bottle moved through. Started as raw materials, raw pellets, took those raw pellets, put it into the first department, the molding department. Then went from there down the conveyor belt to the filling department, got filled with water. And in each department, we're adding in more direct material, more direct labor, and more factory overhead. So in the molding department, I got somebody who works in that department. So there's my direct labor. I have direct material, the raw materials. And I have factory overhead, the machinery. Moves down the conveyor belt to the next department. The filling department. I have people that work in the filling department. I have direct materials, the water, and I have overhead in that department. Moves further down the conveyor belt to the to the capping department. Put the plastic cap on. I got somebody overseeing the machinery that does that. The direct material is the cap. The direct labor is the people overseeing the machinery. And the factory overhead is the machinery itself. Then it moves further down to the next department, to the labeling department. The label gets put on. The label itself, more direct materials. The people overseeing the process, more direct labor. And of course, the factory overhead, the machinery, putting the label on. And that moves into the packaging department. More direct materials, the packaging itself, the plastic packaging, maybe inside the cardboard box. Direct materials, direct labor, people overseeing the packaging, factory overhead, the space within the warehouse. You can see that at each department, as the material is processed further, that's where it comes from, processing. As it's processed further, in each department, we're adding in more direct material, more direct labor, more factory overhead. In looking at that comparison between job order costing and process costing, we can see how the direct materials and direct labor and factory overhead are applied. When it comes to the job order costing, we simply apply the direct materials, direct labor, and factory overhead to each job. Very simple process, you know that. When it comes to process costing, I'm applying direct materials, direct labor, and factory overhead to each department as the product is processed further. So direct materials, direct labor, factory overhead added to each department. Okay. And then eventually all of those costs move with the product down the conveyor belt to become the finished product, cost per unit. So the example that they give you, the textbook gives you, is I don't know what are they doing here? Was it trail mix or something? I don't know. Anyway, there's a process involved here. They take the direct materials, which are the fruits and the vegetable, I guess. They take those and they put those into the roasting department. They roast all the fruits and the vegetable, whatever. Then when that's done roasting, they move it into blending department where they mix it all together. Then eventually becomes finished goods. But as it moved out of raw materials into roasting department, I have employees that are helping me in roasting department, and the overhead, which are the machinery. We take those costs that were added up in that department and we transfer those into the next department. It follows the product into the next department where we add in more direct materials, more direct labor, more factory overhead. And then those costs, along with the cost prior, move into finished goods inventory to represent the cost per unit. So that's how the process works. And I'll explain it just a little bit more in detail. So as I am applying these costs, I think about the physical flow of the cost. I think about what happens in each department, okay? And how we assign those costs as they move down the assembly line or down the conveyor belt. So what we do is we assign the costs based off of what's happening to the product as it's being processed. And we do that using what we call weighted average. Weighted average, as the name implies, is the average cost. We apply that. And we do that in 4 steps. The first step we do is we determine the physical flow of the inventory. It started as raw materials, went into the first department, work in process, the roasting department, and then it moved into the second department, the mixing department, and then it moved into finished goods. But we determined that the physical flow as it started in one department to the next. The second step is we compute what we call the equivalent units of production. Now, let me explain what equivalent units of production is. In my earlier example, I used a water bottle. And in this example, we have what we call equivalent units of production. The water bottle itself, the finished good, is the bottle with the water in it, the cap is on it, the label's on it. That's the finished good. Okay, it's available, ready for sale. Each individual unit that is ready and available for sale is a finished good and represents a single unit. Now, as the process goes, it moves through those departments, right? So I want you to think about this. The materials, just the materials, when it moves into that first department, the molding department, I'm taking raw materials and I'm building the mold. When that part is finished, it's ready to be moved to the next department. We can consider that finished part an equivalent unit. It's a percentage that has been complete in the process. We call those equivalent units of production. So we compute the total equivalent units of production. The third step is we calculate the cost per unit of production. And then the fourth step is we assign and reconcile costs. I'm going to use the example the textbook gives you to help you to better understand this, just so you have a bit more of a visual representation rather than my fun water bottle example. So the first step is that we determine the physical flow of units. They started as raw materials inventory, and then they moved into the first department, which is the roasting department. Okay? So here we can see the production with respect and the data respect to those to the process for the roasting department. On the left side, we're computing the 120,000 units which need to be accounted for. And how we got to 120,000 units total to be accounted for is we take 30,000 units beginning work in process inventory, and we add in units that we had started during the accounting period. That gets us to the 120,000 total units. Beginning work in process inventory plus units that we started during the accounting period. That gives us the total units that we need to account for. So that we see that on the left side. On the right side, we need to match or reconcile that 120,000 units. And we do that to 100,000 units that were completed and transferred out to the next department, plus 20,000 units in ending work in process inventory. So the way I want you to think about this is to find the number of units that we've completed and transferred out. We can do that in one of two ways. One is we take beginning work in process inventory, so beginning inventory, plus units that have been started during the period. That's the first method. The second method is we can take the number of units that have been completed and transferred out and add that to the ending work in process inventory. Both of those will give us the total number of units that have been completed and transferred out, or total units to account for, I should say. So it's really just two methods to get the same result. Now, as we are looking at those units, we calculate what's called the equivalent units of production, which is to say this is the amount of whole units that could have been started and completed during the accounting period. The reason we use equivalent units of production is that some units were not finished during the accounting period, so we need to be able to assign cost to those. On your screen, you see a couple of things, a couple pieces of information, and I wanted to explain these to you. We have direct materials, and as you know, these are the total direct materials used in the process. But we also have what we call conversion costs. Now, I want you to understand it this way. A couple weeks ago, we talked about different cost categories, remember? We talked about the total cost of making products. And as you know, that's direct materials, direct labor, and factory overhead. Direct materials, direct labor, and factory overhead, we call those product costs. Remember? Talked about that maybe 2 weeks ago, I think. Maybe 3 weeks ago. I don't remember. So we talked about product costs, direct materials, direct labor, and factory overhead. I want you to think about those product costs. Direct materials, we know we've used. Direct labor, we know we used. Direct materials and direct labor, we call those two together. We call those prime costs. The reason why we call them prime costs is because they primarily make up the majority of the cost of the product. Prime costs. We also have what we call conversion costs. And conversion costs represent a portion of the direct labor and the overhead. So part of direct labor and the overhead are what we call conversion costs. We call them conversion costs because they represent the cost of converting the raw materials into a finished good. That's why we call them conversion costs. So I want to make sure that you're very clear on what conversion costs are. And I also want you to understand why we express these in percentages. So we can see that the beginning work in process inventory is 100% complete for the direct materials, but it's only 65% complete for our total conversion. The ending work in process inventory is 100% complete for the direct materials, but only 25% complete for the conversion. The units completed and transferred out for the blending department are 100% for both direct materials and conversion costs. We separately compute equivalent units of production for the direct materials and conversion costs. This is because direct materials and conversion costs typically enter the process at different rates. That's why we call it conversion costs. It's the cost of converting from direct materials to finished goods, you see? So that's where these come from. That's why we see the different percentages. Uh, the second part of computing the equivalent units of production is to understand the formula, of course, to be able to compute equivalent units of production. And that formula is relatively straightforward. We take the equivalent units completed and transferred out. Equivalent units completed and transferred out, plus the equivalent units in ending work in process inventory. Okay? That gives us the equivalent units of production. So, in looking at our example down below, the units completed and transferred out are at 100%. And we can see that it's 100% because it means that we've completed 100% and transferred out 100% of those direct materials. So, for direct materials completed and transferred out, it's 100,000 units. And the ending work in process, 100,000 units completed. They're completed and transferred out. So for direct materials, it's 120,000 units. 100%, right? The ending work in process inventory has 20,000 partially completed units. The direct materials is 100% complete. And so this means that it has 20,000 equivalent units of production. That's 20,000 times 100%. This gives us a conversion rate of 25%, where we take the 20,000 units and we multiply that by the 25% to get 5,000 equivalent units of production. So that is how we find the equivalent units of production. It's a relatively complex formula, so I want you to take your time when you make those types of computations. The total equivalent units of production equals 120,000 units for the direct materials because 100% completed and transferred out. Good question. The total equivalent units of production equals 120,000 for direct materials. That's 100,000 plus the 20. And 105,000 for the conversion. That's 100,000 plus the 5,000. The amount of the inputs to produce 100,000 completed units and to start the 20,000 additional units of production. That's how we get to the 105,000 total units or whole units of production. Yeah, great question. Okay, so that leads us to the third step which is to compute the cost per equivalent unit. So I'm breaking this down to a per unit basis. And the way that I'm going to do this is, of course, formula based as well. I take the beginning work in process inventory plus the additional costs added for the period. Those additional costs added for the period come from the direct materials and the direct labor, uh, as a part of the conversion cost. So direct materials is the cost added for the period for direct materials, and the conversion costs are the costs added for the conversion. So we take costs of beginning work in process inventory plus the costs added for the period equal the total costs. Then we divide that by the equivalent units of production that we got from step two. That gives us a cost per equivalent unit of production. The fourth step in the process is to assign and reconcile the costs. Assigning the costs, very straightforward. We take the equivalent units of production and multiply that by the cost per equivalent unit, giving us the total cost. Then we just add all those up to get our total costs accounted for. Very straightforward process. I will say that it's important as you work through that to go in order of the four steps. As you know, they're all formula based, so it's just a matter of following that process, following those steps. It's a very complex subject. Equivalent units of production is a very complex subject. We use this information to help us as managers to be able to control our costs. It's super, super critical. Controllable costs are the costs that we as managers have the ability to control within our purview. Department's equivalent costs per unit can be compared with prior months. Being able to compare costs helps us to be able to control costs. We're able to calculate things like the variance. And as we're able to calculate variances, we're able to control and monitor the evaluation performance of the company with respect to cost. We evaluate performance. Top management looks at department managers in each area, and we tell the department managers, hey, you got to be able to control your costs within your own department, costs of your direct materials and direct labor that you have ability to control. Top management evaluates department managers based off of their ability to control their costs for each department. In management, we try to improve our processes to eliminate waste, to be more effective, and to be more efficient. And so we evaluate ways we can improve our processes. And of course, we use the cost information to also help us to prepare our income statement and balance sheet, respectively. Cost of goods sold and on our income statement and ending inventory on our balance sheet are reported respectively. So the cost information helps to drive all of this. That's why it's important for us to understand things like equivalent units of production. We can prepare our statements, our financial statements, and management statements using the product cost information. We can prepare what's called a production cost report. It basically shows us all of the respective costs related to production as it is directly related to process costing. And this represents the four steps that we followed that we learned about a little earlier. The first step is to, of course, identify the physical flow of the units. The second step was to compute the equivalent units of production. The third step was to compute the equivalent units of production on a per unit basis. And the fourth step was to assign total costs. And so we can see how uh, all of those four steps uh, give us the total costs accounted for. And in that, it's important to keep in mind the physical flow, because the physical flow, it tells us about the cost flow. So if you look at a nice, cute little um, flow diagram like the one we see in front of us, we can see how direct materials, direct labor, and factory overhead is applied to each department. And then as it's applied to each department, when the product moves from one department to another, all of those costs flow with it. So the cost of each unit follows the unit as it flows through the manufacturing process. So direct materials, direct labor, factory overhead applied to the first department. All of those costs move with it to the second department. We add in more direct materials, direct labor, factory overhead to that second department. And then the total costs flow out of the work in process and then to finished goods inventory. And then when we sell the inventory, it moves off of our balance sheet and onto our income statement as cost of goods sold. Yep. It's just a matter of following the physical flow of things. So here we have our example. Here we have a company uh, that is doing the roasting and the blending, the same data we have from before. Uh, Here we have some additional information. We have things like uh, our beginning balances, purchases of materials, direct materials for each department, labor for each department, indirect labor, which is part of factory overhead, and then other factory overhead components like insurance, utilities, depreciation expense, and other stuff. So we take that data and we have to make some journal entries to help us to record the physical flow of the inventory as it moves through the departments. So the first thing we do is we account for the direct materials. So we have to allocate the direct materials. So the first transaction we see here is we're purchasing raw materials. So we debit raw materials inventory and we credit accounts payable. The second thing we need to do is we need to take that raw materials and allocate the raw materials to each department within work in process. So I debit work in process inventory for each department, and I credit the raw materials that we've used in each department. And lastly, for direct materials, I need to be able to allocate any indirect materials that we've used. So I debit factory overhead and credit raw materials inventory for the use of any indirect materials. So those are the three transactions we make for allocating direct materials. Secondly, I need to allocate my direct labor costs, which is very straightforward. I debit work in process inventory for each department, and I credit factory wages payable to recognize the direct labor used in the manufacturing process. I also need to recognize any indirect labor used in the manufacturing process. So I debit factory overhead and I credit factory wages payable. Remember, indirect labor, these are like your supervisor's salaries. Yep. So I've already allocated my direct materials, I've allocated my direct labor. Now, of course, I need to allocate my factory overhead. And the way that I do that, of course, is I debit factory overhead and I credit all of the overhead types of accounts. Prepaid insurance, utilities payable, accumulated depreciation, and of course the cash payments I've used for operating activities. This helps us to record the overhead used that has been incurred. This company uses a predetermined single wide plant rate method rate. In this case, it's 120% of direct labor. And so we apply the factory overhead based off that 120% rate. So I take my direct labor cost for each department, multiply that by the 120%. That gives us my applied overhead for each department. So I debit work in process inventory for each department and credit factory overhead to apply the factory overhead rate. So there we have done the application of direct materials, direct labor, and factory overhead through those entries. It's also important for us to be able to understand as the inventory is being transferred from one department to another, what that overall transfer looks like. Because as you know, in each department, I'm adding in additional direct materials, direct labor, and factory overhead. So here we have a very nice flow structure to show us how that inventory is being transferred from one department to the next. So, for example, I'm moving inventory out of the roasting department and into the blending department. And as I'm doing that, I'm taking my direct materials, direct labor, factory overhead, and I'm going to debit the blending department and credit those costs from the roasting department. What this effectively does is it shows us how those costs are being transferred from one department to the next. Let's see. And the last part of that physical flow is as the inventory finishes in the last department within work in process inventory, we transfer it out of work in process and transfer it into finished goods inventory. And the way that we do that is we debit finished goods inventory and we credit work in process inventory of that second department, which is blending in this case. You'll notice that the finished goods inventory is the same amount as the cost of goods manufactured because the total cost of goods manufactured is representative of the total finished goods inventory. I want to also point out here how we account for cost of goods sold. And as you know, the way that we calculate cost of goods sold is to take the beginning finished goods inventory plus the cost of goods manufactured minus the ending finished goods inventory gives us cost of goods sold. That is the cost of goods sold formula. So anytime you're asked to figure out to compute cost of goods sold, it's beginning inventory plus cost of goods manufactured minus ending inventory gives us cost of goods sold. So now that we know what the cost of goods sold are, we can finish our journal entries by recording sales and by recording cost of goods sold. To record sales, we debit accounts receivable or cash, depending on how the customers pay us, and we credit sales. Now, of course, the second part of that transaction is recognizing that we sold the inventory. So we debit cost of goods sold and credit finished goods inventory. Once I've made all of those transactions, I can then formalize my income statements, my income statement and balance sheet. On our income statement for a manufacturing company, you'll find sales minus cost of goods sold equals gross profit minus our operating expenses equals operating income minus your taxes and interest expenses equals net income. That's the format of the multi-step income statement. We learned about that, of course, back in Principles of Accounting 1. On our balance sheet for a manufacturing company, under inventory, we're going to have raw materials inventory, work in process inventory, and finished good inventory balances. We, of course, learned about that a few weeks ago in this class. One thing that we can compute based off of the information provided on our income statement and from our balance sheet is the cost per completed unit. The cost per completed unit is calculated by taking the cost of goods manufactured during the accounting period divided by the number of units completed and transferred out to finished goods inventory. In this case, let's see here. Cost of goods manufactured was 1.2 million that we got from. We're gonna go back just a second. 1.2 million we got from our cost of goods manufactured, and the 97,000, of course, is representative of the difference between the work in process and finished goods inventory from raw materials. And then, of course, it gives us $13.02 for cost per completed unit. You probably won't have to calculate that one too often. So, within process costing, a couple of recent trends that we see. Just-in-time manufacturing, of course, it continues to be at the forefront because it helps us to reduce inventory levels and reduce waste. The process design, the way that we lay out our manufacturing facility to reduce the number of setups and the number of movements. All of those help us to save on cost. We have robotic process automation. This is where machinery comes into play to help us to reduce tasks that we would normally prepare for this process. So, for example, in the accounting office, we use robotic process automation to help to automate our processes that we would normally spend hours doing. These are like routine, repetitive tasks. Instead of me entering all of these adjusting entries at the end of every single month, I have that automated because it takes time for me to do that. So if I can automate it in my accounting information system, why not? It helps to reduce the amount of time. Another trend in process costing is continuous process. Just like the example I gave with the water bottles in the manufacturing process, We try to heavily automate that to a continuous flow. We also focus a lot on services now, more service than anything else. And we're also very customer oriented. We try to evolve our processes around our customers and their needs. One thing that we do calculate or do identify is what we call process yield. This shows us how efficient we are at using our process costing to minimize cost and maximize our revenues. No system is perfect, and can also tell you that oftentimes in manufacturing, we might see a combination of both job order costing and process costing. It really depends on what the type of products that are being manufactured and by whom. And so we might see a hybrid cost system that includes both job order costing and process costing components. The yield that I mentioned earlier that we tried to calculate, this helps us to identify how efficient we are at our operations, especially when it comes to process costing. And this yield, we take non-defective units produced divided by the number of units that could have been produced during the accounting period to give us our total yield. Again, it tells us a lot about our overall efficiencies. It tells us how efficient we are in the manufacturing process. We earlier we went through the 4 steps as it relates to the process activity costs. We went through the 4 steps. I showed you the weighted average method. Now I'd like to walk through very briefly the first in, first out accounting method. I got you, Genesis. Thank you. So using the first in, first out method, following the same 4 steps that we walked through before, I can show you how the difference as it relates to physical flow, computing equivalent units of production, and on a per unit basis, and then reconciling those and assigning those costs. So same 4 steps. The only difference is I'm going to show you what it looks like as it relates to first in, first out rather than the weighted average. So the first step, as you know, is to identify the units to be accounted for. And this we take the beginning work in process inventory and we add in the units started during the accounting period. So using first in, first out, of course, the primary difference here is going to be in our beginning work in process inventory amount. Then we're going to add in the units we started and completed during the period and subtracting out the ending work in process inventory balance, which is going to give us the units to be accounted for. So in that first step, to compute the units to be accounted for, and of course reconciling these, we take beginning work in process inventory plus the units we started and completed during the period, minus ending work in process inventory, giving us the units to be accounted for. The second step is to compute the equivalent units of production. And under first in, first out method, as you know, with first in, first out method, we are going to take our oldest inventory first and sell that first. So that also means that we're going to take our oldest inventory that we have in the department and process that first. So that way our costs are aligned with the first in, first out method. So we take the same formulas that we've used within weighted average, But of course, the difference is going to be how we treat the inventory. So to find the equivalent units of production, we take the number of equivalent units needed to complete the beginning work in process inventory, plus the number of whole units started and completed and transferred out, and plus the number of equivalent units in ending work in process. That gives us our equivalent units of production formula. And what does it look like in relationship to first in, first out method? We have our beginning work in process inventory plus what we started and completed in during the period minus our ending work in process. And we can see, I'm sorry, plus our ending work in process. And we can see the primary difference being the, the full number of units, right? And that's because of the way that we treat first in, first out versus weighted average. The third step in the process is to compute the cost per equivalent unit the same way that we did it before. We take the cost added during the period and we divide that amount by the equivalent units of production that we got from step two. The conversion cost per equivalent unit we can see is slightly different than when we did the weighted average method. And lastly, we've assigned the reconciled cost the same way that we did with the weighted average method, but with this, of course, it looks slightly different because we're using the first in, first out accounting method, inventory method. So that, believe it or not, actually ends our discussion on process costing. Are there any questions that any of you had on process costing, or do you feel it's relatively straightforward? I mean, what's your overall thoughts, your overall perception on everything we talked about today? Brianna. Brianna, are you there? I saw you unmuted. I didn't hear anything really come out. Can almost hear you. It might just be you have to adjust your microphone volume maybe or something like that. Well, the technical stuff. And any thoughts? Anyone at all? You're also welcome to type in the chat if you feel. Um, any thoughts, comments, questions, concerns? Straightforward. Yeah, no worries. No, I'm glad you felt that way, Brianna. Yeah, I'm with you. I think that's a relatively straightforward topic. Again, I think where a lot of students get tripped up is computing those equivalent units of production. Super important that you follow the steps in the right order as you're computing equivalent units of production. Don't get too frustrated in those calculations. I know it can be a lot sometimes. So, um, but yeah, I think overall it's relatively straightforward. If you ever run into any challenges along the way, you're like, hey, Dr. B, I don't really quite get that, or you need any clarification, just feel free to let me know. Just shoot me an email or a message in the classroom or whatever, and I'll be happy to get back to you and work through any of these concepts with you to help you make sure that you fully understand them. Yeah. My job is to ensure that you have a full understanding of these concepts and that you feel comfortable with them, right? We're not here to master them, but we are here to make sure that you have a full grasp. Genesis, were you going to make a comment or?
I meant to apologize for the scribbling. I pressed the wrong button.
Oh, I was wondering if that was you. I couldn't figure it out. It's all good. No worries. Yeah, you know how technology is. I do that too, and I'm just like, whoops. Yeah, no worries. Great. So just as a fast reminder, week 5 is where we're at. For the Sunday night, you have the Chapter 20 quiz. You are more than welcome to work ahead in this class. I will never stop you from doing that. In fact, I've encouraged it. So if you want to go ahead and work ahead of time, you're more than welcome to do so. Whatever makes it easier for you. I want to make sure that you feel comfortable in this class and that you're making great progress. And I see that some of you are working far ahead, and I appreciate that as well. So anytime you ever need anything, you just feel free to reach out to me. I'm here for you, no matter what it takes, okay? So with that, I'm just going to stop sharing here, and I wanted to say thank you all so much for your time today. I really do appreciate all of the effort that you're making in the class. And if you ever feel like you need anything, just reach out to me. I am here for you 100% of the time. So thank you all again. Appreciate all of you, and I hope you have a wonderful rest of your night. Thank you so much.
Thank you.
Take care,
Thank
y'all.
you.
Thank you. Good night.
Thank you.
Take care, y'all.